Welcome back to the channel. Like always, my name's Jose Najarro and I am a self-taught investor looking for investment opportunities for my long-term portfolio. I am very excited about today's episode. Today we are going to take a look at some of the top 3 clean energy, solar energy, and EV stocks right now in the market. And these are ones that big boys are following right now. For each company, we're going to take a quick look at their technical analysis. We're going to look at their future growth, and we're going to take a look at their balance sheet as well as how their valuations are looking right now. Before we get started, let's make sure to smash that like button. It helps so much with the YouTube algorithm and I truly appreciate it. On the description and on the pinned comment, you should also see a link to my Discord channel. It's free to anybody that wants to join. We have over 1,000 members there and we want to have you in there to just discuss and talk about different stocks. Down there, you should also find a link to Webull. If you sign up and deposit $100, we both could get a free stock. I think right now they're running a special where we might get 2 or 3 stocks. So like I mentioned, today we are going to take a look at 3 stocks that are in the clean energy market. And these are ones that big boys are playing right now. And yesterday, I did an episode on the top 20 ETFs that have outperformed the market. And out of those top 20 ETFs, 5 of them were actually in the clean energy market. So right now we can see that the solar, clean energy, EV stock, EV company and sectors are doing amazing if 5 out of the 20 made it there. So on today's episode, I ended up looking at their top 10 holdings for those 5 EV stocks, and I ended up finding which were the companies that had the most resemblance in all ETFs. And the first one we're going to take a look at is ENPH. The second one we're going to take a look at is Nio, and the third one we're going to take a look at is JKS. ENPH, that one was in 4 out of the 5 portfolios. Nio was in 3 out of the 5 portfolios, and JKS was in 3 of the 5 portfolios as well. And if you guys like this episode, let me know in the comments, like that I can do some more. There were other that also were in about 3 of the 5 portfolios as well. All right, so the first one we're going to take a look at is Enph Energy. This is ticker ENPH. Right now it has a market cap of about $17 billion. Year-to-date returns are 339% and is currently sitting at its all-time highs. Enph Energy designs, develops, manufactures, and sells home energy solutions for the solar photovoltaic industry in the United States and internationally. They make energy converters. They also have software to monitor and collect data on their energy solutions. The company sells its solutions to solar distributors. They also sell directly to large installers, OEM manufacturers, strategic partners, and homeowners. So right now we are taking a look at the chart of ENPH, and here in the chart, I take a look at 2 things. The first thing I'm trying to see is the stock overextended? Is it super far from its moving averages? And unfortunately, right now with the current stock price, it is overextended from its moving averages. And just because it's overextended does not mean it is gonna pull back. Usually 2 things can happen. One, it usually stays flat and the moving averages ends up moving to it, or 2, it does pull back. Actually, there's a third solution, which is a mixture of the first one and 2. It can do a small pullback and it can also have the moving averages finally meet up with it. So it is something that is noteworthy that they are overextended right now. The other thing I'm taking a look at is where do we see high volume for the stock? Right now, a lot of volume is between $61. There's another big portion of volume here in like the 76. And for those that don't know, the type of technical analysis right now I'm using volume profile, and this gives me the amount of volume within a certain stock price. And I like using this instead because it tells me at what stock price we're seeing the most amount of volume coming in. The next biggest portion is somewhere right here around $105. But we can see as the days continue to go up and this stock price continues to increase, the volume within those stock prices have continued to decrease and decrease. And this is why sometimes people believe that there might be a pullback just because right now there's not much volume within those stock prices. Now let's take a quick look at the future growth for Enph. So Enph is expected to grow its revenue 28.5% annually on average for the next 3 to 5 years. This is a super hyper growth stock. I believe anything growing over 15% is a growth stock. Another thing we're seeing is Enphase is already profitable right now, and they're actually also positive on cash flow from operations. So that means that they have money coming in from their everyday business. Next, I want to take a look at their balance sheet. Their balance sheet, they have about $661 million of cash and short-term investments, and they only have $360 million of debt. So they have pretty much enough cash to pay off their total debt, which means they have a very strong balance sheet. We saw they were profitable, and we also saw that they were a hyper growth stock. Things are looking good for Enphase, right? We have a good revenue growth, we have them profitable earnings, we have them cash flow from operations positive, and we also have them with a strong balance sheet. But what thing we did see is they were a bit overextended and huge growth in the past few months. So what I wanted to take a look at was the price to sales ratio and how much it has changed from its previous years. So we can see right now for November 23rd, the price to sales ratio was 25.13. And you can see in the past few months, it has grown dramatically. On average, it's actually below 10. It seems to actually be below 5 in the past few years. So that's the thing one has to understand before investing in this company. Is this price to sales ratio expansion worth it, or is it a little bit too overvalued? I want you guys to let me know, what are your thoughts. Let's say right now I'm not too heavy into the solar, but let's say, for example, if I was heavy in the solar, how I would play a stock like this, let's say I want to get some entry position, I would enter with a small position just because it is a bit overextended. So just if I wanted to have that taste or that skin in the game, I would open with a very, very small entry position. Obviously, each investor is different. Some investors are willing to take this risk. They probably believe there's still much more growth, which they could be right. There's no right answer right now. The only thing I do want to say is I do believe this stock price will be very volatile. We might see some big down days. We might see some big updates. So I think it's good to understand those risks. The second stock we're going to take a look at is one that's very popular right now. This is Nio, ticker INIO. But before we do that, guys, don't forget to check out my second channel, Jose Najarro Entrepreneur, where I post new videos every Fridays, Sundays, and Wednesdays just on ways to overall grow yourself and become more successful outside the stock market. So I definitely would appreciate the support, and I promise you guys the content there is also great. So first, let's take a look at Nio. What does Nio do? Nio sells electric vehicles in China, Hong Kong, the United States, United Kingdom, and Germany. The company offers charging solutions, including Power Home, home charging solutions. They do Power Swap, which is a battery swapping services for their vehicles. Power Mobile, a mobile charging service through charging trucks. They have public chargers, a public fast charging solutions. They also have Power Express, which is a 24-hour on-the-van pickup and drop-off of charging services. Right now, Nio has a market cap of $75.44 billion. And let me say this, year to date, it has 1,388%. Congratulations to all you long-term holders, Nio. That is insane. That's life-changing returns in a matter of a year. Right now, it is also sitting at its all-time highs. So first, the first thing I want to take a look at, is it overextended? You can see right now the stock price is overextended. And like I mentioned, just because it's overextended does not mean that the stock price can't continue to go up. You can see here, right, all this portion, it has been overextended. It did a small pullback here, but it still continued its overextension. So just because it's overextended does not mean there will be a pullback. It's just, again, something I like to see. The second thing I want to see is, where do we have big volume? Obviously, we have big volumes down here, but between this 40 and 49, actually $50 range, there's a nice amount of volume that picked up the stocks around these shares. That's actually pretty impressive. Right now, where we're sitting at over the high 50s, right now it's about $56, I believe. The stock, we can see there's very minimal volume there. Obviously, this probably is just from one day of action here, but we can see there is a nice amount of volume between that $45 to $50 range. Next, let's take a look at Nio. Forecasted annual revenue growth is 35.7% on average annually for the next 3 to 5 years. This is another hyper growth stock. Is this higher than the one we just looked at? Yes, a lot higher than ENPH. The second thing I want to take a look at is, unfortunately right now, Nio is not profitable in GAAP earnings per share, and they're also not positive on cash flow from operations. So they're not making money from their everyday activities right now, which is something one would be worried about. The thing that we have to make sure is, does it have a strong balance sheet? So right now, Nio has about $22 billion of cash and short-term investments and about $8.2 billion in debt. So almost 3 times more cash than debt. This is a strong balance sheet, but remember, we needed to have a strong balance sheet because they're not profitable right now and they do not have a cash flow from operations. Next, let's take a look at the valuation. How is Nio different from a past few years? Unfortunately, it does seem like Nio just went public, I want to say late last year. So price to sales ratio right now is about 34, ending at the stock price of November 23rd. And we can see on average from December to June, the average price to sales ratio was below 10. So what has changed? And in September, the price to sales ratio was around 12, 13. So price to sales ratio has definitely extended a lot. And again, this doesn't mean that the stock price is gonna fall back. It's not really a bearish case, but it's just something investors should keep an eye of. The third company is JKS, but before we do that, guys, don't forget to check out the link below to 7investing.com, where every month they recommend 7 stocks for $17 a month. If you use my link or my promo code Jose, Jose, you get $10 off the first month. May I say, yes, this is an affiliate program, but I use their services and would recommend it to anyone. And also, while you're down there, check out the merch, Self-Taught Investors. I'm pretty sure most of you guys are like me, a self-taught investor, just learning this. I've been doing this for the past 7-8 years, learning about the market, reading how to read balance sheet, and just overall how to look at a market and how to value companies. So right now we are taking a look at the third company. This is JKS, Jinko Solar. This is another Chinese company right now. Market cap is about 3 billion. So this is a lot smaller than the other two we took a look at. Year to date is 181%. And right now it is down 23% from its all-time highs. Jinko Solar engages in the design, development, production, and marketing of photovoltaic products. The company offers solar modules, silicon wafers, solar cells, recovered silicon materials, and silicon ingots. It also provides solar system integration services and develop commercial solar power projects. The company sells its products to distributors, project developers, and system integrators. So now let's take a look at that chart. The first thing, like I mentioned, what I'm looking for is it overextended. JKS is actually the first one that is not overextended compared to the other two we're looking at. We can see it's definitely pulled back from its moving average. Like I mentioned, it is down 23% from its all-time highs. The second thing I'm going to take a look at is their volume within the stock price that it's at right now. And we can see right now where the stock price is where most of the volume for this stock is at right now. So I do think that's a great thing. That means that a lot of people are buying within this portion, which is a gap between $56 and $67, right? That's a huge range. That's a $10 gap. But as a long-term investor, I don't think it's too worrisome to really look and penny the stock price, right? It's just good to see how the overview and the top level view is looking at that moment in regards to volume. So next, let's take a look at JKS. JKS is expected to grow its revenue 11% on average annually for the next 3 to 5 years. This is actually the smallest growth compared to the other ones. We saw the other ones were hyper growth stocks. This one is nowhere near that field. Right now, JKS is profitable, it seems, and it does have cash flow positive from operations. So it's making money from its everyday activities. Next, let's take a look at that balance sheet. Right now, JKS has cash and short-term investments of about $6.3 billion, and it has debt of $22.4 billion. So not the strongest balance sheet, right? We see that it has way more debt than cash and short-term investments, but we do see that it is profitable and has positive cash flow from operations. So that hopefully helps it pay down that debt and allows it not to need that much of a strong balance sheet. But again, this is definitely a little bit weaker compared to the other two. Price to sales ratio for JKS is 0.63, a lot lower than Nio, a lot lower than Enphase. But remember, we saw that this company is not expected to grow its revenues dramatically. It is barely profitable and has positive cash flow from operations. And it does have a weak balance sheet at the moment. Compared to its historical price to sales ratio, this one is one that's also not overly extended. I guess investors are just not happy with that type of revenue growth this company is seeing. So those are the three stocks I looked at today. Like I mentioned, these are the top three stocks that were in the top 20 ETFs that were in the solar. And remember, I mentioned out of that top 20 ETFs that destroyed the market, 5 of them were in the energy. The first one, Enphase, was in 4 of those companies. Nio and this one, JKS, were in 3 of those 5 ETFs. So it does look like big banks and big boys are really grabbing into these stocks. Let me know, are you planning on buying it? Me personally, right now, I'm not too much into the clean energy market right now. I don't see too much has changed for these valuations to have increased. Again, that doesn't mean they're not gonna go up. They just mean, for me, I would likely put my money in some other market at the moment. And again, there's multiple ways to invest, multiple ways to make money. So if you are long in these clean energies, best of luck to you, and I hope you guys make money on this prospect. Take care, guys. Have a good night and see you next time.